Joining us right now, we'll talk about global trends, investments. We got Tom Lydon joining us here. And we were saying, geopolitics just are not bothering this market. Why is that?
They're not.
They used to.
They did, but I think it's a little bad news. And sure, in our hearts, we feel bad about it. But you look at earnings, continue to beat, and
But we would worry about trade. We would worry about the price of commodities, oil primarily. I mean, there were all these economic ramifications to those geopolitical events that would affect the market in a tangible way. Now it's not.
Well, it's not. And today, people are enjoying the good weather. People are going to the beach. We tend not to think about it.
That defines complacency to me.
We are very complacent. And that's a big concern with volatility at multi-year lows. The big fear is when everybody comes back from summer vacation, might we see some gyrations in the market as we get in the fall. But some things we look at, emerging markets hitting multi-year highs, right? China ETFs hitting 52-week highs today. Very interesting, more money flowing in. A little concern though, high yield ETFs, we're seeing some money starting to flow out there. Right. We've had a run there for a while.
Yep, we were just talking about that this morning on the high yield. So is that where you'd put the money with some of those emerging markets still, or
well, I think
is it too late?
No, I don't think it's too late. Okay. I think there's valuations, especially with concern over in Europe and the Middle East right now. Valuations are very low over in Europe. Looks good. Emerging markets really look great too. And if you feel like you've missed part of this market move, diversify into over those areas. Another thing is silver, and again, I'm not always a commodities hound, but silver compared to gold, that silver-gold ratio is way off historical. Usually it's around 50 ounces of silver to buy an ounce of gold.
Right.
I'll tell you right now, it's around 65. So that ratio is going to get back in line, and being that industrial metal, we're going to see higher prices.
Very interesting. Haven't talked much about silver, that's true. All right, stick around, Tom. We're going to come back with a closing countdown. Bob Pisani will also join us. And we wait for Herbalife's earnings after the bell tonight. We all know the history with this company and all the angst and all that's going on with Bill Ackman. Look at the volatility just today on this stock, and it's going out with a gain of about 1.5%. I think you can pretty much guarantee it's going to be volatile after the close when the numbers come out, and Kelly will have that for you shortly. I'm running out of time here. Tom Lydon, you probably don't buy Herbalife, do you?
I don't. I mostly hair care products.
Yeah, we can't split hairs on things like that anymore. Bob Pisani, big week coming up. We've all pointed out.
I'm a little concerned with some of the internal action. The Russell 2000 underperforming again today. It's down almost 5% on the month, with the S&P up.
And the
1%.
transports today too, big.
Yes, but the transports haven't had that big divergence. This is now just started. We're now in a trend with the Russell underperforming the big cap indexes. I also see the home building index now at a new low for the year. That's not going anywhere. Other leadership groups, the energy stocks, which had been leadership in the last 2 months, they're also now underperforming. So there are little pieces here. S&P was at a historic high last week. One day last week, there were only 50 stocks in the S&P at new highs. What's that all about? That's a divergence. That's what that is.
You are seeing divergence for sure. And if you talk about flows, small cap ETFs are losing billions of dollars this last month.
Yeah, so that's been the trend lately. Got to go at this point. That's the first hour.